Right. Hi, everyone. Welcome to today's live analysis session brought to you by IC Markets. Trust you've had a great weekend, and let's get the new trading week underway. Right. Before we start today's session, please take note of the disclaimer. Right. This is market communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right, hi Ajay, good to see you again. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Adverse Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's up on the economic calendar this week. There's quite a few things going on. We've got three major central bank announcements taking place, alongside with a heap of other data releases as well. Right, starting off with the central bank action, we've got the Federal Reserve releasing their monetary policy statement on Wednesday, 18th of December, followed by Chairman Jerome Powell's press conference. And then on Thursday, 19th of December, we have the Bank of Japan and the Bank of England releasing their respective monetary statements as well. Right, hi Ajay. Yes, definitely we'll be covering the Aussie, the dollar CAD, dollar franc as well. We'll start off with the dollar index and then we'll all right, looking at the calendar, right, as I mentioned, besides the three major central bank announcements, we also have flash PMI data for France, Germany, and the Euro area, the UK, and the US all out today, right? Then we also have labor force survey report coming out of the UK tomorrow on Tuesday, 17th of December, alongside the Zoo Economic and iPhone Business Climate surveys for Germany. We also have inflation data out of Canada and retail sales as well. That's all tomorrow on Tuesday, 17th of December. And in the second half of the week, we have inflation data out of the UK. And of course, then we start the slew of central bank announcements beginning with the Fed. Right, and then finally on Friday we wrap things up with retail sales out of Canada, as well as the PCE price index, which is another inflation measure for the US, and that's out on Friday, December the 20th. Right, now let's dive into the charts and trading view and begin the analysis on the dollar index. Right, so we can see here, if you look at it on a weekly basis, right, on a weekly time frame, we can see the dollar index has rebounded strongly over the last couple of weeks, especially in the second week of December, as it rose strongly from 105.85 to as high as about 107.22. Right, this was a pretty big move, pretty large weekly gain, right, gaining almost 1.15%, 1.15%, or rising about 120 pips just last week alone, right? So you see a nice rebound in the dollar index last week, right? And coming back to the daily time frame, right, we can see the dollar index ran into resistance last Friday, stalling at around the 107 level, and it's pulling back today as we speak, right? But because we also have retail sales, we also have flash PMI data out of the US later today, and tomorrow we also have retail sales. Should we see a strong set of numbers from both these data points, this could then function as a near-term bullish catalyst for the dollar index, right? So with dollar index currently pulling back today, right, I see a nice pullback support level. I see a pretty decent pullback support level at 106.47. Right, so take note, right, if we see today's flash PMI data coming stronger than expected, and also if we do see retail sales tomorrow point to higher consumer spending, both of these could function as a near-term bullish catalyst for the dollar, which would mean we could probably see the dollar index bounce off the pivot, which is at 106.47. This is a pullback support level, and we could see it resume the uptrend. Right, so this would be for the first half of the week, right, for the first couple of days. And remember, on Wednesday we have the FOMC meeting taking place, where the Fed is expected to make a 25 basis point reduction, and that could cause the dollar to give back some of the gains that we see at the beginning of the week, right? Especially, right, remember, so take note, if we do see a strong set of macroeconomic data on Monday and Tuesday, the dollar is likely to bounce higher. And then as we head into the FOMC meeting on Wednesday, right, we could see the dollar give back some of the gains, especially if we see Chairman Jerome Powell communicate pretty dovish outlook for future monetary policy action. So we could see some pretty wild swings in currency markets this week, right? Not only do we have the Fed, of course, we also have the Bank of England and the Bank of Japan. All right, so we have identified the first support, the pivot level at 106.47. It's a pullback support level, and very clearly the first resistance is at around this swing high that has taken place on Monday, 25th of November. That's at around 107.50. Right, looking slightly below, right, a little bit below, I see a nice overlap level at around 105.45, right, it's nice overlap support. We can see dollar index running the resistance on Wednesday, 6th of November, after which it found support on Friday, 6th of December, forming a nice swing low here at the end of November and early December. So this is where the first support can be identified. Right, on this nice uptrend, we can also run a Fibonacci retracement starting from this swing low on 27th of September, going up to the high on the 22nd of November. Right over here, we can see none of the Fibonacci retracements align well with the pivot of the first support. That's fine, but I also see a nice uptrend here that begins from 5th of November. So let's try and see if this retracement can be more suitable. Right over here, we do see the 20, 38 and 50 sitting a little bit closer to the respective levels, which is the pivot and support. So let's just keep, 38 and 50%. So let's just keep 38 and 50% here. And we can highlight this as a zone. And here as well. Right, so these are the key levels for the dollar index on the daily time frame. Right, let's move on down to the 4-hour time frame and see if we can fine tune the analysis. Looking here, okay, first resistance, just moving it up to swing high that's occurred on 22nd of November. Pivot, right, if I stretch it all the way back, if I look at the pivot now, right, it's actually a nice overlap level all the way till here, right, all the way till 21st of November. 106.51 is a nice overlap support level, and the first support is fine, don't really need to adjust that. And on over here, we can also identify another nice uptrend that begins on 6th of December. So we can run a retracement starting from 6th of December up to the high of last Friday, 13th of December. And we can see that the 38.2% retracement aligns very well with the pivot, right? The overlap support here. Right, so once again, right, these are the key levels for the dollar index on the daily and 4-hour time frame, right? And we can see that it is approaching an overlap support, which is also accompanied by 38.2% Fibonacci retracement, as well as another 38.2% Fibonacci retracement from this larger uptrend that began on 6th of November. Right, so once again, just to summarize the dollar index, if we do see stronger than expected PMI data today, and of course higher consumer spending tomorrow, Tuesday, 17th of December, right? Both of these data points could function as strong tailwinds for the dollar index, so we could see a potential bullish bounce of the pivot at 106.51, and then bullish bounce does occur, does materialize. We can then target the first resistance, which is at 107.56 as a potential take profit target, right? And I would also identify this level here as an intermediate resistance level at around 107.15. Excuse me, sorry. But this is where the dollar index ran into resistance last Friday as well. This is where it stalled last Friday, and since markets opened today, right, with markets reopening today, it's been sliding lower as well. So if we do see this bullish bounce materialize today or tomorrow, right, then we can identify the first take profit target, which is this intermediate resistance level at 107.15. And of course, if it continues to climb even higher, then we can then target the first resistance at 107.56 as the next potential take profit target. All right, so these are the key levels here for the dollar index on the daily and 4-hour time frame. We've got the Bank of Japan coming up first and on Thursday, and followed by the Bank of England. So let's just cover these two currency pairs first, and then Ajay will move on over to your request, which is the Aussie, the Ludi, and dollar franc. Okay, so the Bank of Japan is going to release its monetary policy statement on Thursday, which is 19th of December. right? As usual, the Bank of Japan doesn't specify the time of the statement release as well as the time of the press conference. So take note, it has a little bit of ambiguity as to when they would release the statements at the specific time, but generally the statement is released between 3 and 4 a.m. GMT time, and the press conference commences about 1 to 2 hours after. Right, hi Ren. Yes, we'll definitely be covering the cable as well because we've got the Bank of England coming up, and we can take a look at the Euro too. All right, so looking at dollar yen, right, when I look across this level at 154.45, I see a nice overlap resistance, and we see a pretty decent swing taking place here. And even over here, you can look at it, you can even stretch this level back, stretch the pivot all the way back to mid-May. I see nice support here. Then we see a little bit of resistance once the bearish breakout occurred on 24th of July. A little bit of resistance here, then resistance once more in early November, and then support again in mid-November to the third week of November. So this is actually a nice overlap level that we have identified, that I've identified as the pivot. Where you can stretch it all the way back to this level here. So it's 154.69 is a nice overlap level. That's also accompanied by a Fibonacci retracement at 78.6%. So this retracement level was found starting from this swing high on 15th of November, going down to the swing low on the 3rd of December. Right. And then looking at support, there's a nice little pullback here that's occurred in early November, right? Nice pullback support level here. And if you stretch it all the way back, right, it also looks like another nice overlap all the way here. So 151.54 would be is where I've identified the first support is an overlap level. Right, let's just, for out of interest, let's stretch it all the way back here. Yep, it does look like to be a pretty decent overlap as well, right? You can see resistance here in the third week of February, support here in the end of March. And then you can even argue here there was a nice support level once more in early November, support again on the 27th of November, and then resistance briefly on the 4th of December. So it's pretty decent overlap level here. Now, first resistance is another pretty decent overlap level as well, right? We can see a little bit of resistance for the dollar yen taking place on 30th of May at around 157.65. And then we see support taking place here on Friday, 12th of July. Then we see resistance once more on 19th of July. So this is another pretty decent overlap level, which I've identified as the first resistance. We have also run a Fibonacci retracement, right, starting from this swing high on 3rd of July, going down to the swing low here on the 16th of September. We can see that the 78.6% retracement aligns pretty well with the first resistance, and we can highlight this level as a zone here. Right, the Bank of Japan is expected to maintain its key policy rate at 0.25%, right? So if that were to happen, right, we can expect the yen to probably weaken further, and then that would cause dollar yen to be lifted. But take note, because we also have the FOMC meeting taking place first, right? FOMC meeting takes place on Wednesday, 18th of December, so perhaps we could see the dollar yen pull back initially, right? So we might see the dollar yen pull back on Wednesday, right, rising up towards this pivot level here, running a little bit of resistance and pulling back. But remember, in the second half of the week, we have the Bank of Japan, and if they come out with a very dovish statement as well as a dovish press conference, we are likely to see that potential pullback reversed, and we could see this currency pair end the week on a higher note. Right, so these are the key levels here for the dollar yen on the daily time frame. Let's zoom on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. I think it's pretty fine, right? I think the levels that we have identified is pretty applicable on the 4-hour time frame as well. If anything, yeah, I think that's pretty fine. If anything, I would just like to point out this level here at 153.40. This is a pretty decent intermediate support level, right? We saw the dollar yen make a nice swing low of this level here on 19th of November. There's a nice swing low support level here, and it's also where dollar yen has found support today as well, bouncing off this level a couple of times, first early in the morning and then during the European trading hours as well. So this looks like to be a pretty decent support level as well, almost like an pullback support level, right? And I would just like to take note of keep that in mind. And the other thing I would add on the 4-hour time frame would be this ascending trend line, right? It's a pretty decent ascending trend line that we can point out as well, right? And this intersection of the ascending trend line and the intermediate support would be a pretty is a good indication of the continuation of the uptrend, right? If it breaks below this intersection, right, then we can definitely expect dollar yen to pull back further, perhaps all the way down towards the first support at 150.84. Right, so we can expect dollar yen to probably rise up for the first couple of days, rising towards the pivot, and then once the FOMC meeting takes place and the Fed does move ahead with that rate cut, and we see a press conference that points to further dovish outlook on monetary policy action, then we can perhaps see the dollar yen pull back, reverse off the pivot and drop lower, and especially if it breaks through this ascending trend line and the intermediate support at 153.40, we can probably expect this currency pair to drop even lower, right? So these are the key levels here for the dollar yen. Let's move on over to the pound, to the cable, because we have, of course, right, the Bank of England coming up on Thursday, and this central bank is also expected to keep its interest official bank rate on hold, right? Going back to the calendar, right? The official bank rate for the Bank of England currently sits at 4.75%, and the market forecasts are pointing to a pause. And similarly for the Bank of Japan as well, they are also expecting a pause for this central bank. Right, so looking at cable, right, starting with the daily time frame, you can see cable has been in a strong downtrend since 22nd of September, right? But it's made a nice retracement here to the upside on 10th of December, right? This is almost like a bear flag that got taken out on Thursday, 12th of December, right? This was like a nice bear flag that got taken out here. Right, so this bear flag, this retracement to the upside was a bear flag, and we saw bearish breakout take place last Thursday, and continues on Friday as well. But today, right, we've seen the dollar, we've seen pound, we've seen the cable stabilize just above 1.2600, and has retraced higher once more, right? So I just want to highlight this bearish flag, right, where we saw a bearish breakout take place last Thursday. But for now, of course, we don't need this flag, and we can also see that where cable ran into resistance last week, it's a pretty decent resistance area as well. There's a nice swing high, right? It's like a nice swing high resistance that has been formed. So this is where we can identify the pivot, right? Perhaps this is where we can see the cable rise up towards this level here, right? And potentially stall and reverse to continue the downtrend, right? And on the I also see a nice descending trend line as well, and we can see that the cable came close to this descending trend line on 6th of November, and last week it hit this descending trend line once more, right, and then has reversed to drop lower. So this is also important descending trend line to take note of as well, because if we do see a clean break above this descending trend line, right, we may see a shift in momentum, and we could then probably expect pound dollar to rise higher, probably a little bit similar to this period in time, right? Over here from 17th of July till the 9th of August, right? Cable was in a strong downtrend, reversing from 1.3025 to as low as 1.2655. And once this bullish breakout occurred, in mid-August, we saw a very strong bullish reversal to the upside. So take note for now, this currency pair continues to trade in a prolonged downtrend, but a clean break above this descending trend line could highlight a potential shift in momentum. Right, and it also, of course, continues to trade underneath the red Ichimoku cloud, right? This also highlights the current ongoing bearish momentum. Right, okay, so in terms of support, the first support for cable is this swing low here that has taken place on Friday, 22nd of November. That's at 1.2533. And higher up, right, I see almost a very like a nice overlap resistance as well, and a pullback This is a little bit high at 1.3440. This is a nice overlap resistance that I see here. Perhaps there's a level to take note should cable continue to rise higher. But slightly below that, I see another overlap at 1.2858. This is where I would identify the first resistance, right? We see cable making a swing high resistance here in mid-March, running the resistance once more here in mid-June, right? Another swing high taking place here. Then, of course, once the bullish breakout occurred, we see support here on 31st of October and then again on 6th of November. So this is a pretty decent overlap level, which we can identify as the first resistance. Now, on this prolonged downtrend, we can also run a Fibonacci retracement from this swing high on 26th of September, going down to this swing low on the 22nd of November. Let's take a look at all the fibs. We can see that the 38.2% retracement aligns very well with the overlap, which is the first resistance. So let's just keep 38% in the analysis. Right, and because we can see the price, we have the descending trend line, we have the red Ichimoku cloud, all highlighting a potential resistance barrier here, right? So we could probably see this retracement to the upside get stall around the pivot, which is at 1.2770. Right, so these are the key levels here for cable. Let's dive on down to the zoom on down to the 4-hour time frame. Right, in terms of resistance, I think the resistance level is fine. What I would adjust is the pivot just slightly higher here to about 1.3796, and first support just adjusted to the body of the candle here. Right, and also there's a pretty decent uptrend that began on 22nd of November, so we can start a Fibonacci retracement from here to this high on 6th of December. We can see the trend line of the Fibonacci tool or retracement tool capturing the market structure pretty well. And when we look at all the fibs, we can see that it has actually bounced off the 61.8% retracement. Right, the 61.8% retracement is also actually a nice overlap support, right? It's a nice overlap support here. Right, actually, I would probably now identify this as the first support on the 4-hour time frame. This would be my second support here, because we can see pretty decent support for the cable taking place in mid-November, and then once the bearish breakout took place, this level proceeded to function as resistance on 25th of November, then support once more in early December, a nice swing bounce here, and then support once more from last week, right, last Friday, right? So this is a pretty decent overlap level, which we can identify as the first support. And it's also accompanied by Fibonacci retracement at 61.8%. Right, so these are the key levels for cable on the daily and 4-hour time frame, right? Okay, so now let's move on over to a Jace request, right? Let's look at Aussie, dollar CAD, dollar franc, and then we'll come back to the euro, right? So looking at the Aussie, once again, let's start on the daily time frame. We can see a very prolonged and extended downtrend for the Aussie, right? We can see very clearly a series of lower highs, lower lows, and we can probably identify maybe this is almost like a channel, right? A nice bearish channel, I believe. Right, yep, we have a pretty decent bearish channel for the Aussie, and of course we can see that it continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. And we can see this intersection where the pivot level sits and the upper trend line of the bearish channel, highlighting a potential resistance barrier as well, right? We can see here there's a pretty decent overlap resistance at 64.48. We can see the Aussie finding support here, nice swing low support here on 15th November, support once more on the 26th of November, and on the 2nd of December, after which this level then proceeded to function as resistance from 5th of December till the 9th of December as well, right? So we can see a strong overlap level as well as the upper trend line of the bearish channel. Higher up, there's another overlap resistance at 65.37, right? Once again, we see support here on 30th of October, 6th of November, and then resistance on 20th of November and the 25th. So this creates a nice overlap level that's also accompanied by Fibonacci retracement at 61.8%. So we found this retracement starting from this swing high on 7th of November, going down to the swing low on the 11th. And slightly below, right, we saw the Aussie find strong support at 63.49. This is a multi-swing low support level that's been in place since 13th of November 2023. Right, we see the first swing low taking place in mid-November of last year. We see the second swing low bounce taking place in mid-April of this year, and a third swing low bounce taking place in early August, right? So you can see here, this is very clearly a significant support level for now, and it's where the Aussie has stabilized at the beginning of this week, well, today at today's open. Right, so any retracement to the upside for the Aussie is likely to be restricted by the intersection of the pivot, which is an overlap resistance, and the upper trend line of the bearish channel. Right, so that's why we're looking for a potential retracement should the potential bearish reversal should the Aussie reach this intersection over here. Right, looking at the 4-hour time frame, I think it's fine. There's probably not much else to adjust here. I think the pivot first and first resistance are fine. So once again, right, the Aussie is trading in a prolonged and extended downtrend, and it's also, we've highlighted a clear bearish channel, as well as with the currency pair trading underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. Right, okay, so we've had the Aussie. Let's go on to dollar CAD. For the dollar CAD, and it was pulling back a little bit today, so I thought maybe it would fall back towards the pivot at 1.4093. However, the loonie, or the Canadian dollar, right? The Canadian dollar is also known as the loonie, continues to look very weak. It has depreciated significantly since the end of September. We can see here dollar CAD going from trough to peak, right? Last Friday's peak, and in this, since the end of September, this currency pair has risen more than 6%, and about, what is it, almost 800 pips. Yeah, rising about 835 pips. So a huge move to the upside for the dollar CAD, and it looks like this currency pair is going to continue to steamroll higher. Right, so let's just adjust the levels. Right, it's not pulling back. Initially, I thought dollar CAD would pull back towards the pivot, but instead, I think it's going to continue to climb higher here. So the pivot is actually going to be now our first support, and let's try and identify a new pivot and a new resistance. Right, so for that, let's zoom out a little bit and see that we can see that dollar CAD is trading close to 4.5-year high. The last time it was trading at around 1.4240 was back in April of 2020. Right, so it's trading pretty close to a significant swing high. Right, I believe this looks like a significant swing high level here. Right, yeah, it's almost like a nice multi-swing high resistance. Right, we see this retracement to the upside stalling at around 1.4230 in early April 2020, and then stalling once more, making another swing high resistance on the 21st of April. And this is a level, this is a level that's currently being tested. So in fact, I would say we probably have a potential bullish breakout taking place here, right? Remember, if you look back in April of 2020, this level functioned as a pretty strong resistance, and now at the present time, we can see that it's attempting to make a bullish breakout here. So we have a potential bullish breakout for the dollar CAD, right? And the first support is identified at a pullback level of 1.4093. Now, what about the first resistance? For that, we'd have to go back to the charts of the chart back in March of 2020, right? As price pulled back here in March of 2020, we saw resistance here on 31st of March. This creates a pretty decent overlap level, right? This is a pretty decent overlap level at 1.4324, which I believe we can identify as the first resistance here. Right, there we go. And we can get rid of this one. Yep. So that means if this bullish breakout materializes, right, we can then target the first resistance at 1.4324 as a potential take profit target, right? There's, maybe we can run a couple of extensions as well. Let's try it out. Maybe you can run one from here, this high on 15th of November, down to this low on the 25th. Key extension level set at 127 and 161%. And you can see here Then that swing high resistance, which is the pivot, is also accompanied by a Fibonacci extension at 161%, but it looks like it's going to break through this level here. We don't need that for now. Let's try running a retracement from this high on 26th of November, going down to this low here on 29th of November. Over here now we can see the 161 extension sitting pretty close to the first resistance. So let's just keep that extension level on and highlight this as a zone over here. Right, so if this bullish breakout or if the bullish momentum carries dollar CAD higher, right, we can target a potential take profit zone that's identified by the Fibonacci extension at 161% and the first resistance. So between 143.100 and 143.25 would be a good area to identify a potential take profit target for any long dollar CAD trades. Right, so these are the key levels here for dollar CAD on a daily time frame. Let's look at it on the 4-hour time frame and see there's a need to fine tune the analysis. I think this is pretty much okay, right? I don't think there's anything else to do. If I would probably just try a retracement from here, 29th of November, this low on 29th of November, going up to the high of Friday. When we look at all the fibs, we can see that the 61.8% retracement sits quite close to the first support, so that's probably useful to have. But also take note, should we see dollar CAD climb higher, right, especially if it goes higher than this the high of last Friday, right, then that would mean this retracement here is no longer valid and we would have to delete it, right? So just take note of that. Any further upward movement in the dollar CAD beyond 1.4245 would cause this retracement to be invalid, and just remember to delete it from the analysis if we see dollar CAD climb higher. All right, okay, so let's see. Okay, we've covered the Aussie, the key dollar CAD. Now let's move on over to dollar franc, and then we'll come back to euro, and then we'll touch on the commodities and the indices. All right, coming to dollar franc, we can see that, okay, once again starting the analysis on the daily time frame, and we can see that after last week's central bank announcement, the Swiss National Bank made a much larger cut in its key policy rate. They were expected to cut rates by 25 basis points, but they made a 50 basis point reduction on Thursday, right? That was on Thursday of December, and we saw a bullish breakout actually take place the day before, and then the central bank announcement, the larger rate cut, really drove dollar franc higher, right? So the Swiss National Bank is cutting rates, the franc is going to weaken even further, and that's what we saw. And we saw dollar franc accelerate or surge towards 89.50 or surge towards 89.50, which is where swing high resistance had taken place previously. Swing high resistance taking place previously on Friday, 22nd of November, right? So this is very clearly where the first resistance sits, right? And of course, with the franc looking weak, and it is pulling back today, perhaps it's going to find is stabilized at a pullback support level at around 88.60, right? So looking for potential bullish bounce. As we can see, this currency pair continues to trade above the green Ichimoku cloud, highlighting the bullish momentum. And also, not only that, I can identify a nice ascending trend line as well, right? We have a pretty decent ascending trend line here. And of course, we can delete this descending trend line. I just wanted to point it out because we can clearly see here, this was like almost like a bull flag as well, right? It's almost like a bull flag. Let me yep, there we go, from here to here, right? This is almost like a bull flag here, and we saw the bullish breakout take place. And of course, finally, we had the Swiss National Bank cutting rates, which really propelled this currency pair higher, right? But for now, of course, we can get rid of this bull flag. We can also get rid of this descending trend line. The first resistance very clearly is going to be here. This swing high that had taken place on Friday, 22nd of November, and it's also where the dollar franc stalled last Friday, 13th of December. So very clearly, first resistance sits here. And what I see is a nice support, pullback support level at 86.54, which we can identify as the pivot, right? So looking for a potential bullish bounce of this level here. And for support, very clearly, is going to be an overlap. It's a nice overlap here at 87.67, right? I see a nice overlap level. We see the dollar franc rising into resistance on Wednesday and Thursday, 6th and 7th of November. And once the bullish breakout took place on 11th of November, we see a nice swing low being formed here, nice swing low support being formed here on 10th of December. Go for support, right? And let's see, maybe on this downtrend here, right? There's a nice prolonged downtrend that had been in place from 1st of May till 6th of September. Let's take a look at all the fibs. We can see dollar franc has already climbed above 61.8%. Let's look at the 78.6%, right? So here is where the next resistance could potentially lie, right? So if we do see dollar franc rebound of the pivot, right, or the intersection of the pivot and the ascending trend line and bounce higher, right, and especially if it breaks the first resistance, we can then target the next resistance, which is this swing high that has taken place on 3rd of July. And this level here is also accompanied by Fibonacci retracement at 78.6%. Right, then let's see anything else. Okay, on this uptrend here, we can also run a Fibonacci retracement starting from this swing low on 6th of December till this high on the 13th of December. Let's take a look at all the fibs. We can see that a 38.2% retracement aligns very well with the pullback support. Once we go down to the 4-hour time frame, we can probably see this a little bit more clearer. Right, so first resistance is pretty clear. Pullback support might need to just fine tune it a little bit. Let me see. Probably just about here, right? Like a nice pullback level here. And now for the 33, no, okay. Okay, when you look at it on the 4-hour time frame, right? This pullback at 88.79 looks very nice. However, the 38.2% retracement sits pretty far from where this pullback level sits. So because of that, I think I'm not going to keep it in the analysis. Just get rid of it for now. Right, so we can see it's in a nice uptrend as well on the 4-hour time frame, daily time frame as well. So this pullback here, this current pullback could be a good buying opportunity for the dollar franc off the pivot level, which is at 88.79. All right, so we've covered a Jace request. All right, then let's head on over back to the euro. All right, Ren, let's head on over back to the euro, and then we'll cover the commodities. Right, looking at the euro as well, market structure is very similar to the pound, right, as what we saw, prolonged downtrend, trading underneath the red Ichimoku cloud as well. We can also identify a nice descending trend line, right? So not only do we have the presence of the red Ichimoku cloud highlighting the ongoing bearish momentum, this descending trend line is going to be important as well, because any clean break, bullish break above this descending trend line could signal a major shift in momentum. But for now, we can see this currency pair continues to trade in a prolonged downtrend. There's also another bear flag here, similar to the cable. Where do we go? Right, there was also a pretty decent bear flag here that had been in place from 22nd of November till the 10th of December. And then we saw this bearish breakout take place. Cable dropped lower for 2 days from 11th to 12th of December, right, last week. But it has stabilized last Friday and today as well, right? So we saw this break below this bearish flag, but the downtrend looks to have stabilized at around 1.0460 and is retracing higher over the last 2 trading days. All right, so for that we can get rid of this flag now, and we can also run a couple of Fibonacci retracements. Okay, but before that, I see a nice overlap resistance level, right? There's a nice overlap resistance level at 1.0602. We can see very clearly a significant swing low bounce taking place in mid-April. And then, of course, we see resistance here at the end of November and resistance here in the 3rd week of November and at the end of November, as well as resistance in the 1st week of December is also very clearly. This is a very significant resistance level. It's an overlap level, which we can identify as the pivot. So we have the intersection of an overlap resistance, the descending trend line, and also the red Ichimoku cloud, highlighting a very strong resistance barrier. So we could potentially see the euro stall around, not downside confirmation, but pivot, right? Should we see any retracement to the upside for the euro, is likely to stall around this intersection of the descending trend line and the overlap resistance, which is the pivot, right? And you could quite likely resume the downtrend, right? In terms of first support, very clearly here we see we can use the body of the candle here, the bottom here, to identify the first support at 1.0419. Of course, we see the wick dropping as low as 1.0333. But generally, you can see this level at 1.0419 is held up pretty well since 26th of November. So first support is very clearly here. Now, in terms of resistance, there is a nice swing low taking place here as well, right? Look at it here, look at the market structure here, very nice swing low taking place in the third week of June. Right, so this was previously a strong support level, probably here as well, which could then be a potential pullback resistance level. We can also see support taking place here on 6th of November, and then on the 7th, a strong bounce, or short term, or one single day bounce for the euro on the 7th. So first resistance could be over here. It's a pullback level, a pullback resistance level at 1.0665. Now on this downtrend here, we can also run a Fibonacci retracement, starting from this swing high, 6th of November, going down to this swing low on the 22nd of November. Let's look at all the fibs. All right, we can see that none of the retracement levels align well with the pivot and first resistance. That's fine, right? Remember, don't force the Fibonacci retracement onto the analysis if it doesn't align well or close enough to the predefined pivots or resistances. Perhaps there's something we can use from here, from this swing high from 25th of September down to the swing low on the 22nd. In this case, we can see the 38.2% retracement aligned very well with the first resistance. So let's keep that level on. Right, and over here on this uptrend, we can also run a retracement from this swing low 22nd of November to this high on the 6th of December. Let's take a look at all the fibs. Right, we can see here cables, the euro stabilized at around 1.0664, close to where the 61.8% retracement sits. So I'll just keep that on as well. The golden ratio, right, typically tends to function as pretty strong support or resistance areas, especially on the higher time frames, which is what seems to have happened last Friday. Right, so probably a nice intermediate support level here at 1.0448, which is also accompanied by a 61.8% Fibonacci retracement. All right, let's look at it on the 4-hour time frame. On the 4-hour time frame, I think, yeah, it's pretty much fine. Nothing much else to fine tune. Perhaps just this first support bringing down here to this body of the candle on the 4-hour time frame, but otherwise I think what we've identified on a daily time frame is more than applicable on the 4-hour time frame. So these are the key levels for the euro: first support, pivot, and first resistance, and an intermediate support that's accompanied by 61.8% Fibonacci retracement. All right, so we've covered most of the major currency pairs. Let's move on over to the commodities, starting with gold. Then we'll take a look at crude oil as well. And looking at spot gold prices, we can see that this precious metal has just sort of traded sideways within this box since 22nd of November, right? It's just been ranging to the upside at around $2,720 per ounce, and on the lower bound at around $2,650 per pound. So it's experiencing a sideways price action, which also tells us how we can play the range as well, right? So should price fall towards the support level here at 2,615, it helps us identify a potential buy entry, right? And of course, should it reach the upper bound here, which is like a multi-swing high resistance, right, at $2,720, we could identify a potential bearish reversal setup over here as well. So we see a pretty decent support level at 2,607, right? We see a nice swing low taking place here on 9th of October. Then we also see support in place since 26th of November, right? So we can probably, if gold prices drop lower, we can probably expect a potential bullish bounce of the pivot here. And on the upside, of course, this is almost like a nice overlap resistance at $2,715 per ounce, right? We see a little bit of a support here on 23rd of October, but we see a strong swing high taking place here on 25th of November, and then again on 12th of December. right? In terms of support, it's a nice swing low here, almost like an overlap level, right? There's a nice overlap level at $2,531. You can identify it as the first support because we can see spot gold running the resistance here at the end of August, early September. Then we see a nice swing low taking place here in mid-November. So this creates a nice overlap level, which we can identify as the first support. Now, on this big uptrend here, that's let's see, where is this uptrend? Actually, it begins from here, right? October of 2023. We can run a Fibonacci retracement from 6th of October to, let's see, which is the intraday all-time high. Intraday all-time high took place on Thursday, 31st of October at $2,790.10. Let's take a look at all the fibs for this uptrend. We can see that gold has actually stabilized at around a 23.6% retracement and this pullback level here. Previously, this was a pullback support level, and you can see now it's a nice overlap. That's also accompanied by a Fibonacci retracement at 23.6%. Right, and on this downtrend here, I think we can also run a Fibonacci retracement from this all-time high on 31st of October down to this low swing low on 14th of November. Might be the 61 or 78.6%. Okay, not definitely not 61.8, but probably 78.6% that we can use. Right, so these are the key levels here for XAU USD, right? This is the instrument that tracks the spot gold futures. Now let's look at it on the 4-hour time frame and see does it need to fine tune the analysis. I think first resistance is pretty fine, right? Looks yep, just about there. If anything, to make it more relevant, probably yeah, you see support here on 25th October, resistance here on 6th November, swing high resistance on 25th November, and another swing high resistance on 12th December. Now let's see. On this uptrend here, I think I would like to draw Fibonacci retracement because it does look like gold prices have stabilized today at around $2,647 per ounce. Perhaps there is a retracement level that it has bounced off. Let's try it out. From this swing low on 6th of December, going up to the swing high here. Let's look at 61 and 78.6. Okay, it seems to have bounced off the 78.6%, right? Close to the 78.6% retracement. It's almost like an overlap support, right? An intermediate overlap support level around here, which is at $2,638 per ounce. Right, zooming in, and we can see a little bit of support here in the first week of December. Then we see resistance here at the end of the first week of December, right? So support, resistance, also accompanied by 78.6% Fibonacci retracement. Looks to be a pretty decent overlap level where gold prices look to have stabilized just above it. Right, so no changes to the other levels for the pivot on the first resistance and the first support. I think they are pretty much clearly defined. All right, so these are the key levels for spot gold. Let's move on over to crude oil. Let's start with a fresh chart, and we can see right on a daily time frame, right? Crude oil has staged a very strong rebound since the second week of December, right? Stabilizing at around $67.25 per barrel and rising as high as $31.46 per barrel last Friday, right? And also, right, I would like to point out it broke a descending trend line that had been in place as a pretty decent descending trend line, right, which was taken out on Wednesday, 11th of December, and then on Thursday, as crude prices pulled back, it found support just around the descending trend line before staging a strong rebound on Friday, right? So we do see we had experienced a bullish breakout for crude oil on Wednesday, 11th of December, and now I see it falling towards an overlap support level at $70.06. Going to identify this level as the pivot, looking for a potential bullish bounce of this level here, right? Especially after the breakout taking place, there could be a shift in momentum here, and we could see this uptrend extend a little bit further. And with crude prices pulling back, it could find support at this overlap level at $70.61. Now on the slide and where I see the next major resistance coming up is at this overlap level here. There's a nice overlap level at $72.73. A nice overlap resistance that we can identify as the first resistance. So should we see this bullish bounce materialize, we can then target the first resistance or close to the first resistance as a potential take profit target here. And in terms of support, right, there's a nice multi-swing low support at $66.98, right? The first swing low taking place on 1st of October, then 30th of October, and then on the 18th, and of course as recently as 9 December. Right, so these are the key levels here for crude oil. Remember, XTI USD is the instrument that tracks the WTI crude oil futures. Right, let's see anything else to point out here. Right, on a slightly higher time frame, right, I see another good descending trend line as well. It's another strong descending trend line as well. Now, if this descending trend line gets taken out, right, then that's really going to signal a major shift in momentum. Right, we already had the first breakout take place through the first descending trend line, then there's another there's a descending trend line on slightly above, right, another strong descending trend line here. Okay, let's go on down to the 4-hour time frame. See, there's a need to fine tune the analysis. Pivot, I would bring it up here. Right, nice overlap level at $70.44. Looks to be coming close to this level now. And setting first support is fine, and this is a nice uptrend and begins on 6th of December, so we can also run a Fibonacci retracement from here going up to the high of last Friday. And looking at all the fibs, we can see the 23.6% retracement aligning very well with the pivot, so let's keep that level on. Right, no changes to this resistance and support on the 4-hour time frame for XTI USD. So after looking at this bullish breakout that occurred on Wednesday 11th of December, price found support once more off the descending trend line on 12th of December, and we could see this bullish momentum extend further, right? And I also highlight this ascending trend line. There's another nice ascending trend line for XTI USD on a 4-hour time frame, right? And this intersection of the ascending trend line and the overlap level, which is the pivot, could identify a potential buy opportunity to ride the uptrend for crude oil, right? And this intersection is also accompanied by Fibonacci retracement at 23.6%. All right, before we continue, I'm just going to launch a poll as well. I truly appreciate it if you guys can give your feedback with regards to today's webinar. There we go. Oops. All right, okay, so now we'll just wrap things up with the indices. Let's take a look at the 40, right? This tracks the DAX futures, and then we'll also take a look at US 500. So looking at it, it looks to have stalled at around 20,500 since Friday, 6th of December. This level was also identified by Fibonacci projection. So this projection began on 5th of August, from this swing low on 5th of August, going up to 0.2, 17th of October, and ending at 0.3, which is the swing low here on 19th of October. We can see we have the 61.8% projection level, helped us identify a strong resistance barrier, which is where the DAX has stalled since Monday 9th of, or almost like since Friday 6th of December here, and it looks to be retreating away from this level. So bearish reversal has indeed taken place of the pivot, and the 78.6% projection is used to identify the first resistance, and that's at 20,900. Remember, the DAX is trading close to its intraday all-time high, which was formed on Friday the 13th of December. All right, thanks everyone for the votes as well, truly appreciate it, for those of you who have responded. Right, and then looking below, the first support at 19,661 is a nice pullback level, right? We see previously it functioned as a strong swing high resistance here in mid-October, and resistance once more here on 30th. So almost like a double top, some sort of a double top here, before finally the bullish breakout occurred on Monday, 2nd of December. All right, thanks so much for the kind words, Ajay. Yes, always looking to help all of you guys here, right? Whether you're a beginner trader, intermediate, or advanced, right? It's there's always an opportunity for everyone to learn, right? When it comes to analysis and combining some of the fundamentals with the technical analysis, will definitely help all of us to improve our uh, trading journey. All right, so it's here for the DEX. We see it pulling back here. So I'm not sure if it's going to pull back as deep as the first support. So let's look at the 4-hour time frame and see if we can highlight any intermediate level. Right, there does seem to be a pretty decent overlap at 20,263. Probably identify this as an intermediate support level here because we see resistance on 4th of December. Then we see support on 10th of December and then again on the 11th, and it's approaching this level once more. We might just adjust it here, right? And on this uptrend, we can now run a Fibonacci retracement as well, starting from this swing low on 19th of November, going up to the intraday all-time high, which was on 13th of December. Looking at all the fibs, we can see the 50% retracement aligns well with the 50%. That's fine, but 23 and 38% are in no man's land. There's no really level that we can identify. So, excuse me. So let's just keep 50% in the analysis. That's fine. So take note, this in overlap level at 20,263 is going to be really key as well. If it does give way, right? If this level does give way, then we can definitely expect, well, not definitely, we can probably expect the DEX to slide even lower, right? Maybe not as deep as the first support, but definitely at least deeper within the green Ichimoku cloud on the 4-hour time frame here. All right, now let's wrap things up by looking at the US 500. Right, US 500 is also trading close to its intraday all-time high that was formed on Friday, 6th of December, and that's at 6,099.90. Right, it seems to have found support at 6,026. This is a nice overlap level. Right, we see previously this level functioning as a nice swing high resistance on mid-November, then resistance once more at the end of November, and after that it proceeded to function as support and in early December, and then again in the second week of December as well. So this creates a pretty decent overlap level, which has been identified as the pivot. So looking for a potential bullish bounce of the pivot to resume the uptrend, and where the next resistance could come in is where the 161% Fibonacci extension sits. Remember, the intraday all-time high was formed on Friday, 6th of December, and beyond that, we have used this retracement from this high, swing high on 11th of November, going down to this swing low on the 19th of November to identify a potential resistance at the 161% extension level. So if you do see this bullish bounce materialize or gain further traction, we can target the first resistance or close to the first resistance as a potential take profit target for US 500. A little bit below, there's another nice overlap level at 5,872. I've identified this as the first support. We see resistance here from 14th of October till 30th of October, so a period of 2 weeks strong resistance. Then we see a strong swing low being formed from 15th of November till the 21st. So this creates a very nice overlap level, which is also accompanied by Fibonacci retracement at 23.6%. So this retracement was found starting from here, this swing low on 5th of August, of course, going up to the intraday high on 6th of December. All right, let's take a look at the 4-hour time frame, right? Not much else to adjust, right? I think this is pretty clear, right? We can see pivot is indeed a pretty strong overlap level, and we could see US 500 bounce off it, or continue, it came pretty close, right? Last Friday it seems to have reversed just above the pivot level here and could climb higher, especially if, I would say, if it breaks through this descending trend line. It is a near-term descending trend line, right? You can see over here on that began on 12th of December. If we do see a clean break above the descending trend line and also above the intraday all-time high, right, then definitely we could see a lot more buyers come in and drive US 500 higher. All right, hi Costas. Good to see that you've tuned in as well, right? Santa rally, yes, it does look like it could happen as well, right? If you look at it on the daily time frame, right, this is indeed very strong bullish momentum for the US 500, right? We can see it's trading above the green Ichimoku cloud, which highlights the ongoing bullish momentum. We also see it continue to trade above this ascending trend line, right? And it does look to have stabilized here at this intersection of the ascending trend line, and the pivot is going to be key as well. It's going to tell us whether this upward momentum can continue, and if it holds above this intersection here, which is at around 6026, then I think the probability of a Santa Claus rally is indeed higher, right? So structurally, from a technical analysis point of view, this intersection between the ascending trend line and this overlap level is going to be key as to whether the we can see Santa Claus rally take place. All right, so that's what I've got for you guys today. And on the 4-hour time frame, yep, yeah, this is pretty nice as well, right? Okay, right, that's all I've got for all of you today, right? Thanks for tuning in to today's live analysis session brought to you by IC Markets. Do stay tuned, of course, for the rest of the week, where we've got a combination of live analysis and educational topics in English, Thai, and Bahasa. All right, take care, everyone. Wish you all the best in your trading journey, and looking forward to catching all of you at the next session. All right, take care and have a great trading week.